right, let's jump into it. Chance for us to do a bit of the sort of weekend wrap and that. So to obviously sort of have a look at sort of how things sort of finished up for the week. See if there's anything we can pull out for the upcoming week. And look, at best place to sort of start off. Actually, where are we at? It's 3:35 p.m. on Saturday afternoon. So it's 14th of March. So halfway through the month again already. Seems to be definitely sort of flying by. But let's start off with the dollar because this is the main player. This is the big thing that we've been sort of like, well, I've been sort of tracking for a long time, waiting for the turnaround here. This has been one of the slowest turnarounds, well, that I've certainly ever sort of seen, but it has been forever down here. And it's funny because you're fighting so many narratives of de-dollarization and it's here we go, it's absolutely going to get it's going down to 80 and all these kind of sort of things and that. And really, it has absolutely just stuck it to the whole market, and it's just a testament to the whole idea of sort of like when everybody's looking in one direction, where's the pain trade? And it's obviously pushing it up to the other side. And we had an absolute monster. This is on the daily. We had a monster sort of close to the week, as you can see. This sort of resistance zone is something we've been tracking for quite a while and that. And I mean, technically, you could say that this little gap up here, was a higher sort of point. But regardless of all that, we're pretty much right back at that point. Back in May 25. So what are we at now? March. So what's that, sort of 10 months or so? So yeah, certainly a long time that the dollar has been absolutely at its lows, really sort of pumping through here now. And where it's sort of closed, as I said, it's always sort of you could say, yeah, it's nice to sort of look at things in hindsight, but this is the beauty of doing these analysis videos and that, and sort of tracking these things daily and weekly. That it's not the hindsight view. This has been the tracking point. Like the price action has been on there on the on the chart all the way through, and we could see from this period back here where it was kind of like a fake breakdown, and we saw that the buyers were then pushing up, pushing up, pushing up, and we got that break. Remember, 98 was that big one from a couple of weeks ago. Obviously, a bit of a fluff around here because we had the underside of this support. We had this large sort of, this isn't a major kind of falling resistance in the sense of like, okay, the market's reacted to it over and over and over, but it does signify, early indicator that we are sort of seeing a change in pattern. Now we're taking out what effectively would be the swing highs of that, and it's closed on its highs, and I think this could be setting the theme for the next couple of months, realistically. Of course, you know what I mean. It's always the case because we were saying the same thing here. Look at how fast it came into this lot, how fast it came into these lots. Second ever failed, bang, came back down here. So look, anything's possible. Could turn around and just go straight back down here. However, I think what's a little bit different this time is if you look at the price action coming into this test here, it was very stretched. Like it'd been coming at it very hard, very hard, very hard, and then quick undid. Here we've got the second effort, so double top, failed, boom, coming back down and that. This time it's had chance to sort of consolidate a little bit underneath this resistance. And that's, I think, a big tell that this time might be a little bit different in that. We've got a bit of room to move on the RSI, so it's not even screaming hot. How are we going over here? There's negative divergence coming into it at the second effort through here. And this last time here, look, that was a potential, but as I said, it was a bit stretched there. So price action this time popping through a little bit different to what we've seen previously, but certainly finished very strong for it all. And if you have a look on the weekly, you can see that this thing is really starting to pick up, and it's got a lot of room to move on that RSI. So, think about all the sort of, like, it's not like, let's be honest in that. There's a lot of levels where it could sort of obviously get knocked back in that as well. But in the grand sense of things, this is a weekly now, so high time frame, closed on its highs, plenty of room to run with the RSI should it want to sort of continue up in that. And I think the fact that it's been compressed here for so long means that, it's not going to be a 1 or 2 day trade. It's going to be something that could potentially sort of carry back on, up to these sort of like potentially these kind of levels over here, 103.80, 104, that kind of ballpark. of prices up over here. So I think this is a big, and the reason I'm starting with this now is because I think this is very important. The fact that this is closed and it is looking in the state that it is looking right now. If we get down onto lower time frames, this is the little inverted head and shoulders that we had sort of coming back sort of through. I think it was what, Tuesday, Wednesday through here. Again, look, a couple of efforts in that to try and get up here, but look at that run coming into the end of the week. Like it really just kept on sort of charging through. So, yeah, look, come Monday, look, it's hard to say that this thing's just gone boom, 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 boom. I wouldn't be surprised if we do get some carry on with this. I think a lot of people are going to be noticing this close and the strength of the dollar here. And I think there's going to be a bit of a sort of, oh my God, we need to act and sort of, if they haven't already got out, they need to get out of their positions. That'll sort of most likely open up to a little bit of topside move. But then, of course, we go back into normal structure, normal play of this sort of stuff. And, we look for a bit of a back test, maybe coming back down, retest the top side of 100, and then sort of wherever we top out, that's going to be our big confirmation level. So, with these breakouts, you've got those sort of three parts. You need the breakout. Okay, tick, we've got that. Back test, okay, yet to become, and then the higher high. So we don't have the higher high because we haven't seen it sort of do the back test yet. So we've got to fill in those parts as that does open up. And really me sort of saying, oh, it's going to open up and sort of move up a bit higher. That's obviously pure speculation. Don't need to be sort of first into the trade there. But just given how things are sort of closing, and this is obviously provided that there's no major events over the weekend, or maybe even if there are major events over the weekend, it could sort of push this thing along a little bit more here. But we are sort of certainly seeing this sort of start to move up a little bit higher. So I wouldn't be surprised if we do see, this is on the 4 hour now, it's pretty overbought. Which is, look at this, it's just straight up coming into this area here. So if we do see a little bit of a push up here early in that, maybe a little bit lower on the Aussie, maybe you push down on metals, push up on oil, and then sort of maybe look for that sort of bigger sort of weekly back test to this kind of thing, and then that's the way we go forward. If we get the other two parts of this breakout, i.e., well, we're going to have a high, obviously, but if we get the back test, and then we put in a higher high above wherever it starts to pull back from, that's pretty much confirmation. And as I said, I'd be looking, but I don't think this thing's going to peter out. You don't do, sort of 6 months of this movement down here just to sort of break out to go another, 100 points. I would say minimum you've got, like as I said, probably up around that 104 zone I'd be sort of looking for. All right, just before I sort of tick along with this as well, I have sort of noticed that it has been running super in sync with oil as well. So I had a couple of trades of oil this week, and that did okay, but look, it's not really my market. But while we are moving with it all, we can see this thing has got a nice set of inverted head and shoulders that is sort of breaking a little bit higher, and obviously finished above that sort of zone that we had sort of marked out from. Must be going way, way, way back. Oh, geez, all the way over here so long that we don't even have it really sort of marked, doesn't not marked out, but don't have uh, takes the chart a little while to load up. Anyway, point is that we do have this little inverted head and shoulders. I put a chart up on X and that sort of in the middle of the week, and particularly pertaining to oil specifically, but yeah, I guess it's kind of like all commodities around this sort of wartime periods and that. And oil is one of these things that sort of like it will break you like sort of mentally and it'll break you financially, and then you'll see the move happen. And I think this is really displaying this perfectly here at the moment because we kicked off, we got that big gap up over here, $120 a barrel, and then bang, back down to what, 77 or something. I mean, look at this drop. This is on a 4 hour, but this came to, when was it? To Wednesday. 35% drop. You know what I mean? Obviously, there's been enough happening to sort of get this thing whoop up over here. And yes, okay, there's the headlines, there's the the emergency funds, emergency reserves of oil that's being sort of released and all that kind of stuff. And that's what started to sell it back down here. And we danced around here a little bit and yada yada, all this kind of sort of stuff. But regardless of it all, you know, that sort of 400 million barrels. I was listening to a guy talking. He was saying like the world sort of usage rate or whatever is about 100 million barrels a day. So that's bought about 4 days worth. And of course, it's not a complete sort of one-to-one with that kind of sort of stuff with it all. But realistically, it sounds great, but it's not really super significant. And even in response to that, Iran went out and bombed a bunch of tankers anyway, just to sort of go, hey, we'll screw you if you want to try and sort of sort of all band together and give and sort of push up all this other oil. Well, we'll just bomb whatever's around anyway. So look, this thing doesn't look like it's about to peter out, and that the markets and the charts are kind of showing this at the moment. Dollar seems to be very much tied to oil, or oil tied to the dollar, whichever way you want to look at it. But they both started to really sort of strengthen up, as you can see, through to the end of the week. Again, these things aren't one to one, but I think while oil's going up, while the dollar's going up, I think both of them are going to be sort of carrying each other. Opposed to sort of metals. Metals, I've said a couple of times that, gold and silver and that, they obviously have been super powerhouses, but it's not that they're going to crash necessarily because the dollar's going up. But you've got to understand that there's only so much flow of capital to go around. And when the dollar was not viable at all, everything went into the metals, and we saw these things go through the roof. Now the dollar is coming back as a viable option, and I've said this a number of times that sort of why would you want to be buying something necessarily while it's at repeated all-time high after all-time high, when you could then be getting into the dollar at multi-year lows, like for the risk reward. And it's not so much that sort of like, okay, well, when everybody was talking about the sort of de-dollarization and the dollar was going down, it wasn't a viable place for capital to flow into. But what we're seeing now is it is. It is becoming this, and the chart is showing it. We're hitting levels that we haven't seen in 10 months. Why is that? Because more capital is sort of flowing into it. And, as people sort of say, hold on, wait, the market's getting involved with this, the market's actually buying this thing up. Well, you know what? We're going to see a continued flow with that. And I think that is really going to cap upside moves for metals. It doesn't mean they're going to crash necessarily, but, if you've only got half the energy coming into it, how are you expected to match the levels that it was hitting when they were at all-time highs, when the dollar wasn't an option? When all the flows were going, okay, let's go into either sort of metals or the dollar. Well, the dollar's not an option. Well, I guess by default we put it into the metals. Now the dollar is an option. Doesn't mean that it's all going to come out of metals, but it does mean that there's not the same sort of full blanket strength coming from all directions to push the metals to the same heights that they're at. So I think that's just something to sort of keep in mind. But oil and the dollar seem to be sort of running in tow with each other. All right, flip along. We got gold, and this is pretty much what we're talking about. If you can see here, gold really not a great week for gold. If you have a look at this on a weekly, bang, yeah, that's that's not looking great. I mean, the saving grace for it is that maybe it didn't actually take out last week's low at sort of like just under 5,000. But I think certainly we're seeing, look, RSI's tipping. We're seeing this thing 2 bearish weeks here. Maybe look at some like sort of little upside here and put in a little top wick. But should we get that sort of form, and I think this is important to, obviously go through all the different sort of go through all the different time frames of these things. But if we see a move up early and say we get up to 5,100, look, I don't think it's going to get to 5,100, but it could. If it gets up to 5,100 and then it comes back down and it goes through the weekly open, well, what's happened then is you put in a top wick, taking out the bottom, and look at this. See this candle here? I'll take this off so you can see it a bit better. See this candle here? Moves up, top wick, takes out the open level, bang, and it comes down. And this is how we will see, possibly, I would say, a little bit lower on the metals here. As I said, I don't think we're necessarily going to crash. Look, we could come back and fill this wick, 4,400. I mean, it's a possibility. Depends. We'll see how it goes. But, we'll deal with that when we get to it. But the point is that I think that certainly we've got some downside to come here. From a weekly perspective, this looks pretty decent. I wouldn't be surprised if we sort of could maybe visit around this 4,900 level, see what happens when we get around there. But certainly at the moment, it's not looking great for sort of metals for topside moves here. Particularly, we can see bounce, 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 and really close down hard here. So I think any sort of move up earlier in the week, we could see this is a bit of a support zone through here around, 50.80. Any move up to 50.80, maybe a body fill, maybe it's wishful thinking, but a move up towards sort of like 50.77, 50.80, this kind of area, and then we take out the lows, that'll definitely be a time to hold it, and then sort of be targeting at least, I'd say 4,800, 4,800 downside there. Look, it's a little bit oversold here, but it's not quite there yet. So I wouldn't be surprised if we could definitely see some more downside here, and then sort of really see what happens when you're sort of coming in around this zone over here. So obviously I moved that while I was on the weekly, but yeah, around that 48.80. I think it'll be a very sort of interesting level to sort of see what the market does with it. Certainly, metal people can't understand the idea that metals won't be going up. I've said this a bunch of times that they're sort of like, more so silver, but certainly, metals as a whole, they just don't understand that, like, oh, but it's been going up and up and up and up and up and up and up. What do you mean it might go down? Well, yeah, we'll see how it goes. And again, it doesn't mean it's necessarily going to crash. And like, we're not necessarily going to be seeing 2000. I'm not saying that, but it does mean that we could potentially see a couple of $100 swing downside to some of these sort of levels down here before we see a sustained sort of rally back up. So particularly, and again, this is the thing. This is why you've got to be paying attention to all the markets at once, because if the dollar keeps breaking out, I would say that will keep pressure on gold because there's not the flow to have it. I said this the other day. I saw a good quote from some guy. I can't remember who it was. I think it was just some random on X. That people will buy gold when they're worried about tomorrow, but they'll sell gold when they're worried about today. And I think this whole sort of like, think about it, like all the tariffs, what's happening, boom, 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 they all pile into it. Oh, war's about to happen. Was it? Okay, war's happened, boom. And remember back in, where was it? It must have been about here, October. When did they bomb them? They bombed them about here, I think it was, back in June last year. Uh, when they actually dropped the bombs, I think it might have been this period around here. It was one of these sort of periods. People go, oh wow, they actually physically dropped the bombs on Iran and blew up those bunkers or whatever, and gold dropped. You know what I mean? Like, oh yes, of course, subsequently, yes, it's moved on, it's gone higher. But it just goes to show that sort of like, as the market is actually seeing these things develop, it's more sort of like buy gold for the fear of it happening. Okay, now it's happened, good or bad, whatever, it's happened, and now we can probably sort of sell it a little bit. Anyway, I would still be looking for a little bit of downside on metals down here. The fact that this is on the daily and we're almost oversold here, I could definitely see some more downside. Maybe have a look around that sort of 48.80 zone and sort of see if we can sort of see a bit of a bounce through here. But again, I'd still be playing this quite strongly, sort of like in and out kind of sort of status. I mean, I don't think this is the time to be saying, hey, look, gold's going to 6,500 or gold's going to sort of like 3,000. I think there's very much, I mean, look at this as just chop through here. But I do think there's definitely some room for some downside. And I'd be looking around these areas down here, as I said, around 48.70, 48.80. Underneath there, 47, 47.80. It's funny, it's sort of, you see these reoccurring numbers, but the 80s definitely seem to be the number that's sort of reoccurring sort of through a couple of these levels here. But downside mainly looking, and then maybe look for a bit of a bounce play around that 4,800 level. So 48.80. All right, let's take a long have a look at the other metals. So we've got silver. And, excuse me, so we're seeing with silver, silver actually sort of, I had a chart, where was this one? Again, got 50 charts of these things. Which one was it? I was on the low one here. Yeah, here we go. So basically, this is the play that we were looking for. The move up to the 61% retracement from this sell down. As you can see, the highs over here, down to the lows, up to the 61%, and bang. Now that is an absolute trade. And as you can see, these sort of things, like, I mean, this is obviously a directional thing. This could have been placed here, 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 whatever. But that was the zone, as you can see. Look, this is the zone we were looking for, this little red dot. Bang, right into that zone there. But, it just so happened to come on that, so on that level of right at the top of the wick there. So still 61% retracement. That was the key for it all. Bang, smash right back down to the lows. Look, it is sort of finding. Actually, I don't know if you're going to say it's finding support. It really just kind of bounced up here. We could actually let's move this up here and say, look, this is an early indicator line. So what we got 79.60. You do have this support down here, but you know. As I said, with the metals, I'm not looking to. I don't think. I don't know. It's one of these things. I think. Look, see what happens with it. I think sort of 78.60 is the level that it needs to hold. This is on the 4 hour. It's a little bit oversold. Sorry. Daily has definitely got a little bit of room to go. As you can see, sort of like this is. Let's clean some of this stuff up so we can see it. That's a lower close than we've had since, I mean, realistically, let's say back in yeah, around the sort of Feb time over here. And this was only, actually, yeah, it was a lower close than this because this closed up over here. So yeah, this is the lowest close since start of Feb, so in over a month. Definitely got some room to go on the daily here. I think this is probably going to come down a little bit lower here as well. So if we say, look, underneath 78.60, where could we be targeting? Well, you've got a little bit of support in through here. You've got a big one underneath here. So these are the kind of real levels that the metals need to come with. And like with gold, I don't think this is coming back down over here quite yet. I do think that a while ago I said, look, I can't remember what it was, maybe over here. So I said, look, we're going to see 50s before we see 120. And for a second it was looking like, oh, it's going up, but obviously bang, smashed into a couple of times here. However, if we look at this in a little sort of three-leg structure coming down here, we've got the lower high. So say that this is our sort of move up over here. This is that three-leg structure I always talk about. As you move up, you find resistance. Back, find support. Now, this is the crucial third leg. This is the one that's going to give us higher high continuation, double top. Okay, question. Lower high. Well, what does lower high do? It comes back and tackles the swing level, which is this one here, and it's broken through. Yeah, it wasn't a super sort of like bearish close, so it's still, you could say it's a little bit of a question mark, but it's kind of taken out that support area over here, pushed through. I think sort of 78 is really the level for it. If this thing breaks down underneath 78, I think we're going back down to 72.50. That's my sort of call for silver here. This is the area that I'd like to sort of see what happens with silver, and this is probably where I'd be targeting for the next sort of move. Which is another $10 to the downside here. Certainly the RSI's got room to support it. We do have, as I said, lower high. Now this is a lower low. It doesn't mean necessarily we're going to get one of these sort of days, wherever it was, this one here. It was one of these days, sort of drop like $15 in a day. Doesn't mean it's necessarily going in a day, but it does mean that this will come down. This then becomes leg one. So we have to go back and we do these kind of moves again, remember? So the retest and then move down, and this is the kind of action that we're potentially kind of looking for coming down here. Should we get back down here? I think it's a pretty good chance for a buy, and we could try and sort of get a bit of a decent bounce. I did sort of cover silver like a long time ago. See if I can say, where was it? So let me come back to this chart. So I found it was on a different chart. But if we look at the kind of sort of moves that we saw last time, so 2011, around that sort of big move, like everything's not one-to-one, but look at these kind of moves that we had, and we can see what is an expected amount. Down 35%, bounced up 37%, dropped again 40%, bounced up 30%, down 26, up 39. It was wild. It was wild. Boom, 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 boom. So, you got to be sort of prepared for these potential moves for this kind of stuff to happen over here as well. Let's go back to the chart we were using, and sort of accept that sort of like, some of these moves could definitely still see some big swings. And it doesn't mean that sort of necessarily we get down to 70 and we're going down to 50. It means we could be down to 70, we could see back up to 80, back down to 70, back down to 60. You know what I mean? There's definitely some big wild swings to be coming here. But I think, like with gold, if we've got the dollar on the bid, that I think you're not going to be seeing massive moves to the top side. It's just there's not enough power there. And of course, as much as sort of people will tell you the narrative, oh, so war's breaking out and, people need silver. Well, maybe this is why they needed all that silver. This is why they were buying it all up, remember, in anticipation for all this kind of stuff, if you believe that kind of sort of narrative. I think silver people, as I've said a couple of times, they're delusional. They are. They're sort of like, they're forever sort of quoting, oh, have you seen how much silver's been drained from the vaults? It's going to go to 200 in 3 months. Like there was some guy, I can't remember who he is. He's like some one of these sort of commentator people on YouTube. Sort of does this thing. I mean, maybe he was an investment banker or he was a banker of some sort. I don't know. He does these videos and that. He gets like 200,000 views or something. So like a lot of people are watching him and that. And then every now and then he flicks over to like a stuffed dog or something. Um, anyway, these are the kind of people that are sort of fueling this kind of stuff, and they're like, I remember he was saying it's sort of like on 27th of February, that's the day, and it's all going to happen, and silver's going to the moon, and all this kind of sort of stuff, and yeah, lo and behold, that day came, and silver hasn't gone to the moon. So but the thing is, they want to believe the story. They want to believe it so badly. Silver was just suppressed for so long. And then they had this big mammoth run, and it's just like Bitcoin. And this is what I've said: the silver people are just like Bitcoin people. They don't understand that the market doesn't. Once it's going up like this, doesn't mean it's always going to go like this. Like it can go up to 200 maybe in time. Who knows? That's beyond my sort of pay grade for this kind of thing at the moment. But the price action is what we're working with, and we're trading, and we're getting in, we're getting out, and certainly at the moment it doesn't look like it's going there. Maybe next week it's up at 100. Who knows? But I doubt it. Anyway. Enough of that sort of ramble. Point is that we've got a lower low through this little section here. If this thing takes out the 78, 79, 50 and takes out 78, I think we're moving down to 73. Let me just write this up. All right, let's move on. We've got Aussie. Aussie, another one. Not looking so crash hot here. That really sort of came off and that sort of through the end of the week here. And the thing is with this as well, the important sort of factor of this is actually how it looks on a weekly. Look at this on a weekly. Let's take this off. That is not a candle you want to see to sort of give you a lot of confidence you're going higher. So this is pretty much the in inverse. Let's put this just the invert scale here. Inverse high heeled bottom where it comes down, takes out the bottom, or in this case it's the top because it's inverted, and then shoots back up over here. So look, I think certainly 69 cents is the level that you want to sort of see it hold if you're thinking it's going higher. But the thing I've said with Aussie as well, and look, Aussie's got a lot going for it. But you've got to put it into context. And I think this is where sometimes people get a little bit blinded because they only look at certain factors of the fundamentals and they don't know how to apply that in a proper way. And particularly with, let's put this back on here, with Aussie, it's the choice of the market when they're not buying the dollar. So obviously it's a part of DXY, but DXY is like a barometer for US dollar sort of sentiment across the market. And Aussie is obviously, at this point, Aussie against US dollar is obviously still going to be subsequent to that. So when the market's selling US dollar, they're looking at, okay, what other currencies, where could I be putting a little bit of the capital in that? And Aussie is a great place for it. And that's why, for the most part, Aussie's still right near its highs. Where if you look at sort of like, a couple of its peers, I mean, obviously sort of Euro's a bit unfair to do because it's a one-to-one with it all, but look at Euro. You know what I mean? Euro's in a shocking state. Yeah, I was saying back over here that sort of like this was the do or die line for it, that it really needed to hold. And look at this thing. It has been absolutely hammered to the downside here. What have we lost since breaking through that zone? Come down nearly 3%. So, 320 points in that to the bottom side there. But of course, this is a pretty much a one-to-one with the inverse of the DXY. But the point is that when the market's when the market's not buying US dollar, they're thinking, okay, where else can I put the capital? And that's when you sort of look for comparing, okay, we're going to buy euro, we're going to buy pound, and it's not like everybody goes one way or another. But, as you can see, Aussie has been quite strong even through that period while the market's been starting to buy up a bit of the dollar. It's still been pushing towards its highs. Why? Because it was still a question mark over, are we actually going to get a breakout of the dollar? And Aussie's a great viable candidate for a place to pocket because you've got a hawkish central bank, you've got inflation accelerating, highest of all the sort of G10 currencies, and it looks like we're probably going to get a couple more hikes. So, of course, Aussie, bang, great place to pocket. I've heard other people cite the idea that, okay, yeah, because it's far away from the war zone. And yes, I get that, maybe. I guess that could be. I personally wouldn't say that that's the driver for it. I think I'd fall back on that whole idea about the sort of central bank and the interest rates. But now that the market's starting to go, hold on, wait, maybe the US dollar is where we want to put our capital. Aussie's local data is not enough to save it. And I've said this 1,000 times, and I think people, unless you trade the Aussie, you don't truly sort of see the impact of it. But Aussie's kind of like a multiplier with these things. And the fact that we've got the central bank quite hawkish, we've got the high inflation, we've got potential more hikes to come, we've got good GDP, we've got low unemployment. We've got all the factors that kind of lead to central bank being hawkish and okay, yeah, we're able to sustain more hikes because we've got low unemployment. We've got high employment numbers at jobs added. So not just the not unemployed people, but both sides of that. Low unemployment, we've added a lot of jobs in that. So, we've got the capacity where, they could say on the jobs front, we could withstand a couple of hikes. People are still getting employed, people are still making money. So on the jobs front, they could withstand a hike. On top of that, you've got inflation still hot, still moving up. Well, that requires a hike. So of course, yeah. So all those things considered, central bank hawkish. Yep, definitely looks like probably going to get a couple more hikes, and they don't need to sort of counter that with but we might sort of like stuff the jobs because at the moment the jobs are in a healthy position. That's what allowed Aussie to still be up here and also not to be down here. I mean, again, look at the chart of the euro. Bang, like lower, 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 and then if we flip back to the Aussie, right up near the highs. So the reason being that we're still up near the highs is because of that central bank outlook. But that's given that the dollar, they weren't buying the dollar. Now that they are starting to buy the dollar, what happens to the Aussie? Look at these last 2 days here. All of a sudden, people don't care that you got a hawkish central bank. Well, they do, but I'll get to that. They don't care. It's not enough to say, hey, look, we're going higher, higher, higher. People aren't looking at that. They're sort of going, well, you know what? Like, that's all very well, but the market's buying the dollar, so they still buy it against the Aussie. The fact that we do have the central bank, I know this is a bit of a dribble on, but the fact that we don't have the central bank dovish means that we're not down here. See what I meant? Sort of like, we've got the central bank that's got this outlook, so we're still up near the highs. If we had a dovish central bank plus they buy the dollar, we would be smashed. We would be back down around these sort of like, mid 60s, in my opinion. But for the time being, market buys the dollar, that's fine. You take a little bit off the Aussie, but while we've still got the central bank, it means that we still stay a little bit higher compared to the peers. But the point is, you could still see some downside. So if they continue to buy, and the point summed up that whole sort of thing is, if they continue to buy the dollar, we are going to see downside on Aussie. Doesn't matter that it's not part of DXY. Doesn't matter that we've got the central bank that looks a little bit more hawkish. It just, the fact that we've got the hawkish one means that it's not going to 64, but it doesn't mean it can't go to 67. That's my outlook on this sort of thing here. So I'm kind of looking down to these levels over here. Certainly going to be watching to see if we get a breakdown underneath 69 cents. 69 cents will take you through this little breakaway trend, and then we start to look back down towards sort of 67.60 to 68 cents. But that's the kind of level that I'll be looking for Aussie. This is my sort of price target now. So underneath 69 cents for confirmation. All right, and let's finally finish off with Aussie yen. And this has really sort of just been one one explosive move after another, and that this channel just again confirmed beautifully. It really sort of came up to the top side here, bottom side. It's really this is what we're sort of trading with here. Obviously, I've sort of been planning for the break of this channel a couple of times, couple of times, this kind of stuff. I still think this is the trade to potentially get. And if we see, the dollar, so if we see metals come off and we see the dollar strengthen, we could possibly see yen pick up a bit of that sort of safe haven flow. So think about it, because the yen, if you sort of just don't look at the yen in the sense of the BOJ being utterly useless and incredibly dovish forever, if you look at the sort of the yen as its primary, well, not primary, I don't know, one of its core sort of features is it's a safe haven asset. So when the market's sort of going, okay, let's go risk off, we're not buying gold. Okay, let's buy the dollar. We've seen that. That's happening. It doesn't mean everything goes into the dollar. I mean, look, it could happen. I mean, look what happened sort of when the yen wasn't a viable option and the dollar wasn't a viable option. What happened to metals? Bang, through the roof. I don't think necessarily we're going to see that kind of explosive action with the dollar. I mean, we could, but everything's going to get absolutely rattled. Like equity markets coming right off is going to really, I think that's going to be some big, massive downside should that happen. I don't think that's not my base case, but anyway, it's just, again, planning for these sort of outcomes. However, if we see metals not be a safe haven choice and the market goes risk off, we're going to see, obviously, we're seeing the dollar strengthen. We're probably going to see yen cop a little bit of those flows as well. And so the yen copping the flows, despite the central bank over there, the BOJ being very dovish, means that the yen has some potential strength, in this case, downward on the chart. So I think certainly this channel is going to be something that we can really work off. And should we break this channel, I'm going to be sort of going around everywhere. Doesn't mean you sort of short it straight away. I mean, you can short it straight away if it depends how much risk you got. But the thing is, I think sort of certainly if we break this channel, we look for a bounce, we look for a retest of the underside of this channel, lower low, same with we're looking for the dollar breakout, that third action, that third leg, break the low, confirm, and then come down. Because remember, this is only just a breakaway channel. This isn't even the main trend. This is the main trend here. This one, this orange line here. Yeah. So I think there's certainly some downside that could be coming, and strength coming in the yen. But as I said, I've done this a couple of times up here, and it just keeps powering on, keeps powering on. So you don't need to be the first one into the trade in that. This did sort of obviously come down beautifully, sort of through here. The RSI very much sort of showing that it's ready to sort of support a move lower. And I think we could be looking back down into sort of 108 areas at least, and maybe sort of a touch up of this. You can see how prepared I was for it back over here. I still think the destined price is this trend line. I mean, it's hard to sort of say how much higher it's going to go, but it went up to nearly, so we were looking for 114.26. It got to 113.95. Remember, this is at 40-year highs. And with these things, you always get multiple breakouts on different time frames, backtest, higher high, broke through. I think sort of back it down over here. But certainly I think, should we get down into this 107, 107.80, 108, this kind of area, I think this could be a potential buy option, given that that's the trend, given that it's the really sort of, by that stage, come off 500-600 points. That could be a buy option down here. But I think for the time being, we're looking for the short side down over here. But the break of that channel will be really the confirmation of that move to the downside. All right, and let's just have a look what we have sort of in terms of sort of data coming up this week. Data just kind of seems like it's actually taking a little bit of a back step at the moment because it's all just headline driven. But even the headlines just, I mean, every headline is just doom and gloom, doom and gloom, doom and gloom. So I think even the market kind of sort of ignores this a little bit. Okay, so we do have we got the RBA sort of coming in on the Tuesday. So this could be a little bit of a sort of a saving grace for Aussie. But again, as I said, with all that sort of stuff before, I think if the market keeps buying it up, this isn't something new. Like, it's not like, we clicked on now and we go, oh, what? They're hiking. There's been everything. Like I've just outlaid for 10 minutes, sort of all the factors with that. So there's a lot of this I think will potentially already be baked in. So I wouldn't necessarily think this is going to be saving the Aussie. It's got to hold it up a little bit again, as I said, but I don't think that's the big driver with it all. Bit of China data on the Monday, nothing too exciting. Canada CPI, what are they doing? Mid twos, okay, not too bad. Still a little bit high from what they want 2%. Is kind of like the expected target over there. Bit of manufacturing data, US, as I said, got the RBA press conference, yada yada. Um, Move along, ADP, that's the weekly ones. We don't get a forecast, okay. Nothing really exciting here. PPI on Wednesday. Um, Again, these little stars, we're just doing backs tests of all this sort of stuff. So it's producer price index. So again, it's like CPI, but for wholesalers. So a little bit up the thing. It is looking to come back down a little bit lower there. So a little bit cooling. So that's a reason to possibly see a little bit of cooling on the dollar there. So here's the interesting one. We've got the FOMC this week, and they're looking to hold now. I mean, actually, that's not interesting. That's not a big surprise. It's actually been looking to hold for quite a bit. What they have been sort of looking to do is like when they are going to cut, if they were going to cut. But given everything at the moment, it doesn't look like that's necessarily going to be happening sooner rather than later. I think they've been pricing a lot for sort of like mid-year, and that's been pushed out a little bit further, hence the sort of strengthening of the dollar there as well. Just another factor for it. So that's certainly going to be a big one on Thursday morning there. And then sort of ticking along, what do we got? A bit of GDP data over New Zealand, boring. Employment data. Geez, I would have given anybody a prize for guessing this one. 20,000, of course. So 20,000, that's just what they spam. Don't even sort of think anything into that. Unemployment rate low, very much interesting here in that. So again, like, this is what I was talking about before. We got unemployment rate is low, meaning that sort of like, up around sort of 4.4, 4.3, they'll start to sort of go, oh, okay, jobs are a bit of an issue. 4.1, bang, no worries, man. Let's hike because, we've got low unemployment anyway. That's the thing that sort of people get all upset about, and then the sort of like the economics and that don't really sort of care so much. Like, when you're talking about numbers, they don't care about the human sort of cost of all these kind of things. And that's why sort of people sort of will say like, oh my God, they're hiking rates at Christmas. Look, it doesn't matter. And when they sort of see these things, they're like, hold on, wait, to get the economy into a sort of a healthy position, we have to see people lose jobs. Well, yeah, it's not like a sort of, hey, let's make people lose jobs, but that is an indicator of it. And 4.1% is low. So it means that they can withstand hikes. So when it gets up to 4.3, you need to factor and weigh that in. But at the moment, and 4.1% definitely they've got room for a hike there. And as you can see, it is expected. The shock would be for the Aussie if they don't hike. That's something you got to consider. And everything says that they should. Everything says that they're going to. But then you've got the uncertainty of all the stuff happening in the Middle East. And is that going to sort of make them take a bit more of a cautious wait and see approach? That's certainly something that's going to be an interesting thing. If they don't hike, if they hold, Aussie's going to get smashed. Just keep that in mind. I think the risk there is for the not to hike, and then for the market to just absolutely dump the Aussie, because that's what's holding the Aussie up at the moment. The fact that they've got the central bank and they're hiking and they're buying the dollar. This is what I said. If we go back to the Aussie chart, Aussie has overall been sort of quite bullish based off the idea that you've got the strong central bank. If they don't hike and the market buys the US, is the market continues to break out with DXY, Aussie's going to get hammered. But if they do hike, well, it's kind of almost half expected. So I don't see that being like, oh, wow, they've hiked, so let's go to 74 cents. I don't see it happening like that. So I still think no matter what happens, we've probably got some downward pressure coming onto the Aussie, which I said at the time anyway, when we were looking at the charts. Um, Moving on from that, where are we at? We got that. We got BOJ. I thought I saw in there as well. So yeah, so a lot of the stuff happening here. We got BOJ looking to hold. Surprise, surprise. Then we got the press conference with them. Oh, we've got Swiss franc. Everybody, all the central banks are meeting this week, and BOE. Wow, and ECB. This is crazy. This is like such a big, it's like everybody, every central bank is meeting this week. Well, anyway, most of them. Wow, that's very busy. Cool. All right, sweet. So, anyway, that's about it. All right, let's go.